In its first ever annual earnings, Martin Sorrell's new marketing firm has posted a strong set of numbers. Shares in S4 Capital closed around 2% higher in London. It says revenue rose more than 50% last year. It spent much of the year hoovering up other agencies and production companies. Hoovering up. So Martin Sorrell, the executive chairman of S4 Capital, joins me now.
A well-known Hoover.
I know, great to have you here. I mean, it is quite an exciting time when you've seen revenues jump, profits have jumped too. You have
50% on revenues and 100% on profits.
Yeah, it's great.
So a strong start, but from what, acorns, oak trees grow? Or we move from peanut to coconut, or coco de mer is a double-chambered coconut. So, no, the company had a good year last year, a good start, but we're at the very beginning, hopefully, of what will be a much longer incursion into digital. We're in the sweet spot of the industry, driving first-party data, that's data owned by clients, driving the development of digital content and programmatic or media planning and buying. That's algorithmic media planning and buying. So we watch what your media habits are, Julia, and we try and serve you ads that you'd be interested in.
Yeah, data-driven content, but data-driven ad spending decisions as well. And digital is where all the growth is.
Well, it's growing at 20%, yeah. So the industry as a whole, the 1 trillion in the industry, of which 500 billion is in old stuff, including digital, and 500 billion is in stuff like market research and PR and other. Basically, 20% of the total 200 billion is in digital, and of the advertising revenues, that what I described as old stuff, it's 40%. So it's a very big sector, and it's growing very rapidly. Overall, the whole lot's growing only at about 2 or 3 or 4%. So the traditional holding companies have had problems in migrating from the analog model that they had to digital model. So this is exactly the same as you see in every industry, where the analog companies, not of course CNN, but the analog companies are trying to morph into digital companies. But where we are is in the sweet spot in the digital areas.
So if I look at some of the more traditional companies in the space, and of course WPP is
where I'm still the largest individual shareholder.
I know, and your shareholding increased in the last week as well.
In fact, yes, it did increase, and in fact, you know,
congratulations.
Well, that was from one of the board finally saw sense and decided to go along with the award of the incentive plan, which they had put in, and that will continue for a few years too.
And there had been some suggestion, of course, that they might not give you those.
I think it was described as a big climb down.
Yes, okay. And we'll move on from that. Yes.
I'm willing to
dwell on it, but anyway, I'm sure you are. But there are some obvious challenges, and as you've pointed out, you consider yourself now in the sweet spot with going purely digital in your focus, whether that's advertising or the data focus that you've got right now. I mean, they still have huge businesses. They employ thousands of people in
hundreds of thousands.
The buying part of the business. Now, I think one of the businesses that comes to mind is Group M. If we're talking about more and more digital ad spending being programmatic, I mean, is this business
to be fair,
dead?
Group M, you know, is a very strong business.
Okay.
It's probably the strongest, I would say it's the strongest part of WPP. There are digital parts to it, like Essence and Xaxis. I mean, we took Michel de Rijk to run our Asia-Pacific operation at S4 Capital a few weeks ago, and he ran the programmatic part, the performance part of Group M in Asia, and built it into a very significant operation. So they do have digital parts. So I would say Group M is still the strongest part, as I said, and that's a strong and still growing business. Don't write off even the traditional media planning and buying part of the business, although what you say about Essence and Xaxis in terms of programmatic and digitally based media planning and buying is still very strong and growing faster than the traditional business. But I would say overall it's the strongest part of their business. The weakest part of their business is the old traditional creative part of the business, and custom research, which is a part of Kantar, which is being put on the blocks.
Which just takes time to turn around. I want to move on now and get your views on Brexit.
God, what views can I give you? I mean, I did say on one of your competitor networks this morning that we should have more time, that I found it very difficult to accept that we should have sort of rammed down our throats the one one plan, the
one
Prime
deal.
Minister's plan, the one deal.
That's now effectively off the table.
Why weren't there alternatives? And you know, it's almost in Parliament, you know, it seems to me very undemocratic that you keep on having a vote until you get the right solution. I mean, if you applied the same to the referendum, we should have a referendum all the time until we get the right solution. So it's a bit messy, but we've been living with this mess probably for 2.5 years. And what I think I've noticed is that plans have been put in place by businesses to make alternative arrangements. For example, we have a very significant business in Amsterdam, in Holland. We have 3 sites there that we're consolidating to one. The real estate operation there, or the real estate market, is very strong. So you're seeing in Frankfurt, you're seeing a bit in Paris, you're seeing a bit in Amsterdam and in Dublin, the real estate market's reacting as companies make their alternative plans, notwithstanding the fiasco that we've seen in Parliament.
Do you think whether the UK ultimately remains in the EU, however that comes about, or in fact leaves? I mean, businesses have had to make decisions like leaving the UK. We've seen that in the financial sector in particular. Do you think it comes back? Do you think the UK can rebuild and get back investment that it's lost?
In the long term, yes, but I think there's going to be a process if we come out. There is going to be a very significant process of readjustment. That's why I remain a Remainer in that sense, because I think the process of adjustment will be very significant over a long period of time. It's going to take 5, 6, 7 years, maybe even longer, to renegotiate all these trade agreements and move the UK from a trading pattern which is based on the big 4 markets, you know, Germany, France, Italy, and Spain, and the rest of the EU, to a model that's based on BRICS and Next 11. You know, Brazil, even Russia, India and China, and markets like Vietnam, the Philippines, Indonesia, Colombia, Mexico, Argentina, all the market, Africa and the Middle East. We have to redirect our trading pattern to these new areas. So it needs a fundamental reassessment of our export patterns. It has to be strengthened. We have to behave more like Germany in terms of export and export patterns. And I think high quality, high level manufacturing obviously has to come to the fore. Service businesses will have to redirect their pattern. So this is going to take a long period of time. And what we're seeing at the moment, I mean, it was interesting hearing the analysis, because both the Brexiteers and the Remainers, I think, seem delighted by the Speaker's decision to kick this into the long grass.
Yeah, and they do that when the deal fails as well. The problem is everyone won't be cheering forever.